Welcome, everybody, to the Tuesday edition. Actually, not the Tuesday edition, to the weekly edition.
It is the edition.
The live weekly edition of the Not Your Average Investor Show. Today, we have a topic. Now, we know you're going to love. You know why we know they're going to love it, GC?
Why's that?
Because Mike Foster sent it in. We know that when one person in the community is asking something, many people in the community is asking something, and therefore we make that piece of content for you because we love it. And today's question du jour, that's question of the day.
Thank you.
Is what is the difference between turnkey and vertical integration? And we've got another one for you too. It's fake turnkey.
Oh,
we're gonna talk about, because some people like to talk the talk, but they don't walk the walk of the turnkey walk. If you know what I'm talking about. And so if you have, newer to the community and you haven't kind of figured out why we throw around this term so much, or you've been here for a while and you want a little bit of a refresher, it's evolved, right? It's evolved because as times change, what you need to do in order to fully control and experience and provide the best possible service for your clientele evolves naturally. So we're going to go into that, and it's going to be pretty illuminating for our community today. GC, you excited? Oh, by the way, I'm your host, Pablo Gonzalez. With me, as always, the man that I affectionately like to call GC because of his genius concepts, because he knows how to generate cash flow, because he's a great co-host, and because his name is Gregg Cohen. Say hello, Greg.
Hello, everybody. Great to be with you.
It is great to be here, buddy. I love our Tuesdays in studio. I feel like there's been so many interruptions of it in the last couple of days that I love this energy. I love being here. Community's already showing up. And we got a little tradition that we do when they show up.
Yes, we do. It's called the roll call, baby.
We got Christopher Lee kicking us off today with Fernandina Beach. Christopher Lee.
All right, Christopher.
I'm headed that way after this show.
There we are. You got a little speaking gig, don't you?
Speaking over there.
Tell the folks what you're doing.
Is it during the roll call?
Yeah, sure.
Yeah, I've got the biggest keynote of my career.
Absolutely.
I got invited by NARPM, the broker owner conference, which happens to be here in Amelia Island. And I get to share the story of this show and this community as a way to drive word of mouth for property managers. So this has been my platform as much as it's been anybody else's. And it's a really, really big joy to get to share that story.
We're really proud of you, buddy. Good job.
So we get more people, creating community in order to create good the way that JWB does.
Your vision lives on.
It lives on. It lives on. All right, Christopher Lee, I'm coming to your neighborhood. We got our leadoff hitter batting second today.
John Henning.
We got the early bird in the house.
Mr. Dean Curry.
Ohio. We got the mystery man.
Denny Davies.
With a pig suey. He's back to his pig suey. Too bad he's mystery man. Now he's claiming Calipari. We got the MVP. I think you may have heard of him.
I think I know Mr. Lee Bishop.
Mr. Lee Bishop. We got the mama bear in the house.
Miss Cody Adams.
Adams in studio. We got the maven from the mountains of Denver.
Ms. Leslie Wilson.
Leslie Wilson. We got Laura Colby from Washington State. Welcome back, Laura.
All right, Laura.
Charity Saki Graham is back with a hello, gentlemen.
All right, Charity.
Good to have you.
Welcome.
We got our amigo,
Bill Shields.
with a buenas tardes. We got the mountain man,
Bill Green.
saying good morning from the lugubriously peppy mountains of Colorado. Thanks for bringing down the amount of consonants in a row there, Billy.
He's taking it easy on you now.
Taking it real easy on me. We got the Shaw man in the house.
Nadeem Shah. Nadeem, just so you know, your replacement bracelet is on its way. Bella made another one for you, so don't you worry.
Beautiful. We got our favorite name to pronounce, Aaron O'Neill.
Into the night.
Good to have you here, Aaron. We got my buddy, Bob Wiesner from Marietta, Georgia.
All right, Bob. Nice to see you, buddy.
Bob, we got the 5S, our favorite fiduciary flat fee financial advisor friend.
Yeah.
Kelly Barenbaum.
Kelly Barenbaum.
Yeah,
I was on my
Your
sixth
job is
one.
not to count. Your job is to say the name.
Kelly, it's great
All
to see
right, here we go. What else do we have out here? All right, good roll call today. All right, let's kick it off. Richard Hall is here in the house, checking in with his AI assistant. Look at us.
All right,
checking
Richard.
in from the future, Richard. Good to have you, buddy. And of course, we have the patriarch and matriarch of the first family of the Not Your Average Investor Show, Ken and Carolyn Moline with Duchess Karen.
We salute
you. Good to have you, Cheryl Odom from Nashville, Tennessee.
All right, Cheryl.
City. Love it. And the Ringmaster.
Drew Barnhill.
Drew Barnhill's in the house. Pamela Myers is in the house. Good to have you, Pamela.
We got the gang.
We got the gang is here. Let's get it started. GC, do you remember when we first started talking about we should really differentiate this idea of turnkey and what JWB does and what is really needed to succeed in real estate? How do you tell that story of the birth of vertical integration?
Well, it's funny. There have been multiple kind of inflection points in this industry. When I started in 2006, the term turnkey was the way to differentiate from the traditional way that real estate was done. And I remember going and speaking and talking and helping folks understand that there is a different way to invest in single family rental properties. And it was this new thing called turnkey, and nobody had ever heard of it before. And so turnkey was the differentiator. And it continued to be the differentiator, but for many reasons where a whole lot of folks started to learn about single family rental property investing, and some things pointed in the direction of that asset class being the darling asset class for so many years. That there were a whole lot of service providers that popped up. And guess what they called their services?
Turnkey.
Turnkey. And as with most great things, as you start to get more players in the game, the need came about to differentiate again, and really helping our clients and helping those not your average investors understand, and now what is a crowded space called turnkey. What is the JWB definition? What is a definition that maybe you think you're getting a certain thing, but you might not be? And so that's where you and I kind of put our heads together along with our team. We said, you know what? What do we do that's different? What's important here to differentiate here? And that's where vertical integration was kind of coined. That a few years ago now, 3 years ago?
About 3 years ago.
Yeah.
About a year into our runs. I remember being on one of our Monday morning runs and just being like, man, I don't think turnkey really represents, like, I think you guys have evolved beyond that model. Like when I think of turnkey providers at that time, I was just thinking about like people that can bring you a deal, and it doesn't really matter if they're in one market or many markets or what they're doing. And I'm just like, I think what really matters is this idea that you guys, are not just bringing people deals, but you have people in-house that are managing things, specifically the way that you want it managed. And more than that, I just kept thinking about this idea of how, because JWB is in Jacksonville and you are, an inch wide and a mile deep, you don't just affect the deal within the property management lines, right? Like within the property lines. And I was just like, man, I think we should just throw a gauntlet out there of, who else out there can do all these things for you, manage it all in-house, and on top of that, go beyond that to like really be playing at like a local economy level, a neighborhood level, a community quality of life level, which is what was very clear was the priority for you guys since day one.
It was. That was the appeal of going and focusing on one market and making our mark and our impact in one market. It's because at one point, we envisioned having the opportunity and the platform to affect positive change for our investor clients, for our renters who rent our homes with us, for our community at large. I mean, that's the appeal of focusing on one market versus going to 10, 15 different markets across the country. And you're right, it's a different approach than others may take when it comes to real estate. It's really hard to set up. It takes a whole lot of time to refine and build and get to this level now. But now we get to play at a level where we can create these flywheels and we can have this major influence on some of the macro effects of our community here in Jacksonville. And you just don't get that opportunity. And what that means for clients, you just don't get that opportunity if you kind of space it out. But what that means for clients is a whole lot. When you can start to affect bigger things, be an influencer in bigger macro trends and start to have bigger impacts, it means risk mitigation for investor clients, and it means higher upside, and it means being a part of an investment where everybody can win. And I especially hear that third point. I hear that from clients. They want to know that renters are being taken care of and that they're winning as well. They want to know the community at large is winning as well, not just the investor base. So I think all of us here at JWB sit in this really nice seat now where we can start to see those things happen after 18 years of this vertically integrated approach.
Cool. Let's start to share it, man. So we're going to talk about, number one, it's what's in it for the investor when it comes to these different departments that become vertically integrated, right? So we're going to cover acquisitions, we're going to cover property management, we're going to cover client service, and just the strategic element, right? Like the upside part. We're going to cover, thanks to Mike Foster's suggestion, what is in-house at JWB versus being done by partners, right? It's not everything that you guys are doing, although you're working your way.
Yeah, there's a whole lot that is.
Yeah, and then we're really going to talk about this this piece of outside of the property line, right? Like we talk about the order of operations when you acquire properties. People do it wrong, right? Like they like to think of what property am I going to buy, and then once you find a property, you're like, well, I'm in this market, and like who's on Craigslist offering property management services? Instead, it's the order of operations should be where do you have the best teammates, right? Where do you have the person that can give you the best chance to win long-term because this is a long-term investment. And then you want to look around and think, hey, what are the conditions in that market and do they serve me? So this final piece, and then then the property is the thing that comes into play. But, the final piece of talking about economic development and how this goes beyond the property line is that number 2 notch to have. And having a partner working at that level for you is pretty rare, right? And we're going to talk about the challenges of all this stuff and why it just doesn't pop up all over the US. So
100%.
Ready to get into it, GC?
I'm ready, buddy.
All right. Acquisitions, right? Acquiring properties. When we talk about it from a standpoint of what you think is fake turnkey versus real turnkey versus what integration becomes, how would you say that?
So let's start with what we call fake turnkey. There are a lot of operators out there that might claim to be turnkey who may sell you a single family rental property. But here's what I think fake turnkey is. There's a whole lot of operators who don't actually own the assets that they are selling. They may talk to you as a potential client. You may say, hey, I want to buy properties with this criteria. And they may say, okay, great. Now let me go on to the multiple listing service and go and try and find that property to suit you. And then let me put that property under contract and try to basically kind of be a middleman without actually owning the asset. Can you see how that might create a situation that doesn't go smoothly for the end client here?
Yeah, sounds like somebody that you're dating and they're telling they can do something for you for the next 30 years.
I wasn't going to go the dating reference, but I think there's a lot of things that could go wrong there, right? You got, if you don't actually own the asset, you got to think, why didn't you own the asset?
Yeah.
You might not have had the money to be able to buy the asset. You might not have had the confidence to take that risk to actually own the asset. But either way you shake it, if you're buying properties from somebody who doesn't actually own the asset, you don't know that asset is actually going to be sold to you because they are not the decision maker. The seller's not the decision maker, right? Or the turnkey company's not the decision maker. And even if that property does want to be sold, can you imagine? I don't know if you're very familiar with this. I don't know how much we've talked about this on the show, but there are so many things that happen from the point that a property goes under contract to acquire it, right? Like JWB to buy a property, which eventually will become a client property. From the time we go under contract to the time that we close on the house, there are liens to negotiate. There are challenges with title. You might have to get people to sign things that didn't know they needed to sign on the title. You might have to go and scour the country to find them. I mean, the amount of closings on the buy side when JWB buys properties that sometimes don't happen because the seller doesn't follow through on actually wanting to sell, or it just gets delayed a ton of time, is really rampant. So you don't want to put yourself in the seat of trying to buy a turnkey asset that you want to be passive if you're not actually talking to the person who owns it. If it's just a middleman, that's what we would call fake turnkey.
Fake turnkey. And Charity's asking, that's different from wholesaling, right? Charity, if I'm listening correctly, wholesaling is a part of every equation, right? Like the wholesaler is the person that's looking out there, looking for properties and then getting them to investors. Here it's, is the wholesaler representing themselves as a turnkey provider versus, is there a wholesaler that's out there selling to somebody like JWB that has been buying it before, already owns it, and then is then going to buy it for you, right?
Yes, inherently, there's nothing wrong with wholesaling. JWB buys properties from our partners in the real estate community here in Jacksonville, and some of them are what we would call wholesalers. They find properties undervalued, and then they sell it to JWB JWB then renovates or builds that home and then, of course, creates the turnkey experience and the vertically integrated experience that we have for our clients. So there's nothing wrong with wholesaling. There are different ways to wholesale. You can buy the asset and then turn around and sell it to a partner like JWB. Or as a wholesaler, you can just simply put it under contract and then flip the contract to JWB. We're okay with all that because we are an investment firm and we're okay if the delays happen or if something happens. But what you want, if you're investing in passive income, single family rental properties, you don't want to deal with any of that. You just want to make a decision to buy the asset and you want it to be purchased.
You don't want any surprises. Right?
You don't want any surprises. We are here to deal with surprises, and we have to deal with surprises when we buy from wholesalers. But that's not what you want. So there's just a little bit of differentiation there.
So that's fake turnkey. The fake turnkey doesn't actually own the asset. They're basically saying like, yeah, I got you, dog. And then hopefully they're going to show up with it at time of closing and the property manager and whatnot. And then there is the run of the mill turnkey GC. So the way that I would, I guess, understand that, it would be people that have actually bought that asset. It may or may not be rented, and but they are basically buying something and they're going to bring it to you, them owning it, but they're not necessarily the property manager. They might just be bringing in a partner that's a property manager. Oh, I guess we're just talking an acquisition side right now, right? So like, what is it? How different is it in acquisition side?
So the differentiator between fake turnkey and real turnkey would be, do they own the asset? So fake turnkey, they don't own the asset. They're just a middleman. And that's very, very rampant. So ask that question before you start to work with what you believe is a turnkey company. Now, what is turnkey as far as the acquisition part of this? Well, that would be somebody who owns the asset, but they're largely just thinking month to month with acquisitions. The way that this results for you is you might come to that turnkey operation and you might want to buy that property from that turnkey operation, but you might have to wait a period of months. And this is very common. People have to put down binder deposits or some sort of financial commitment, and you basically lock yourself into working with that provider, and you're waiting for that provider to actually supply the inventory. Then the supplier goes out, puts something under contract, closes on the property so that they can actually deliver on the promise to you and actually sell it to you. But it takes time. And so a lot of times you have to wait and your money's not working for you. And what's almost always the case, if you're buying what I would call just turnkey, is you have to wait until your home is rented. So many times you're going to close on that property that you bought from that turnkey operator, but that home may not be renovated at that time and almost always is not rented to a resident. And if it's not rented, it's not collecting revenue for you. And so this is very common in what we would call the turnkey space, right? It's turnkey, meaning they can sell you the asset pretty quickly and pretty easily. But as far as the return on investment, it's not as great for you because you might have to wait 2 months, 3 months, 6 months, maybe to actually receive income from your investment.
Got it. Okay. So then what is vertical integration?
Vertical integration is what you get when you work with a company that has all aspects under one roof when it comes to actually acquiring assets. And they are thinking not just month to month, they are thinking years in advance to make sure that there is a runway of inventory available for you and all of their clients. And they may be acquiring land years and years in advance, like JWB has done since 2011. Like, for example, JWB owns 3,000 lots that we're in the process of developing. And every year when we sit down in business planning, we say, okay, how many of this inventory of lots that we're sitting on are we going to build this year to meet the demand for our clients? So we already own it. What this does is allows for you to always have inventory, a runway of inventory for you. Because if you're a JWB client, you're on a buying plan and you're on an investment plan that, many clients are adding 1, 2, 3, 5 properties a year. Well, you want to know that those assets are there for you. So it allows for you to do that. And then one of the best things that can happen for you, especially if you're a new investor, when you're buying your first turnkey properties, is that they're already rented. And so almost without exception, JWB properties are rented at the time of sale. It gives you a lot of peace of mind and cash flow positive from day one. And that's just normal course of business with JWB because of the vertically integrated approach. And you just don't see that in other places.
So what I'm hearing essentially is this idea, I guess the umbrella theme that I'm thinking of when it comes to acquisition is the strategy behind it, right? Like if you're working with a turnkey, like a regular turnkey, they're just kind of like buying inventory to sell inventory. And that means that if you have a strategy to build a certain portfolio and we get into like an economic time where, inventory is really low, like we are right now, and we were in, kind of like during COVID and
Sure.
stuff like that, you may be delayed and your strategy might get disrupted. But with a vertical integrated company, because they are, creating this like assembly line of like lots and things under construction and whatnot, they're able to keep you to your strategy to a certain extent. And on top of that, I would also layer on strategy wise, I would assume that a company that is buying just in time inventory to sell doesn't have the luxury to really be like, you know what, I'm going to just dominate these four neighborhoods, because if like to really look for the pockets of neighborhoods inside of a city or in whatever markets, and really, be the person that has the best inventory there, because they are, more beholden to like moving the inventory as opposed to like sitting on it and being able to supply it and creating that line. Is that accurate as well?
Yeah, I think so. I mean, you can be a whole lot more strategic when you are not in a need for inventory.
Yeah.
Right? You can keep your acquisitions costs low, which help to increase home price affordability for our investors,
Yeah.
as well as our residents, those who are renting from us, because from the ability that you have to buy years and years in advance, the cost basis of those lots is a lot lower than what it is today. And we're able to pass along those savings to our clients, and ultimately that affects rents and home prices for the Jacksonville community at large. So let's just wrap all that up. When you're vertically integrated, when you have the connections, the ability to acquire, you have the lending lined up so that you can put tens of millions of dollars into inventory years in advance. You're in the driver's seat, and you can create a wonderful experience for a first-time investor, especially coming into this asset class, where you can serve it up on a silver platter. It's ready for you when you're ready to make your decision. It's ready for you when you're ready to grow your portfolio, and it's rented at the time of purchase.
Got it. Cool. So fake turnkey means the person selling it to you does not own the asset. Regular turnkey means they own the asset, but they're just buying on demand at the time of purchase and then getting it to you. Vertical integration means you're working with a provider that owns the assets, sits on years of runway, and is like more strategic in how you can build your plan and also how they can deliver these assets to you in a efficient, economic way and set you up to succeed.
There you go.
Let's go. All right. So the next department when it comes to the rental property owning experience would be construction, right?
Mhm.
No matter what happens, you're gonna need some construction involved, either to get the house ready and to keep it going, right? So you see what's fake turnkey when it comes to construction?
Selling properties to you in a non-renovated state. That happens a lot. There's a lot of outfits out there that say that they're turnkey. You go and you actually get down into it, and they ask you to basically fund the repairs for them. So you have to contribute a whole lot more capital. You have to go along for the ride of construction overages with them. So this is a very scary situation for especially first-time rental property investors. But people claim it as turnkey. I call that fake turnkey. It's an unrenovated property, or a property that is not built, and it is surely not rented at the time of purchase. And that's not good for your returns or your peace of mind.
Yeah, that when you say that, it makes me think of Jag's show where she was, she had a 1031 and she identified 3 properties, and she self-described it as like a nightmare scam, a regular kind of not great experience, and then the JWB experience, which was top of the line. And she talked about this idea of, in 1031, you have a certain amount of time to identify the property, and then you got to lock it in, within a certain time as well. And she was working with what sounded like a fake turnkey provider because they had promised them this property. It wasn't renovated at the time that they needed. She was just kind of like counting on them to to make that happen, the time ran out. She hadn't identified another property, right? So not vertically integrated in land acquisition either. And then the property took way longer than she expected. So, she was kind of like out that money and that income throughout that time. So those are the dangers of a fake turnkey property. So what is a regular turnkey property, GC?
That they sell the property to you after it's renovated or built, and that it would be cash flow positive day one. That's kind of your standard for what a turnkey property should be.
Got it. So it's renovated already, and it has a tenant in it, or a resident in it, right? Okay. So then what's vertical integration?
So when you're vertically integrated or working with a vertically integrated company, you're operating not just for the purchase, right? I think so many lanes are kind of moving towards like what turnkey is focused on the transaction day of when you buy it. But vertically integrated is thinking about the relationship long-term and your long-term success. So vertically integrated when it comes to construction is working with an organization that provides economy of scale because they do a significant level of construction work, and they're able to bring on and work and develop relationships with their contractor base so that there can be cost savings for you, because soon after you acquire this asset, your biggest pain point will be maintenance cost and vacancy cost. But by working with a vertically integrated provider who does, let's say, who builds 400 houses a year and who renovates 1,500 homes a year, what you're able to do is get that line item pricing, those costs down, not just on the big items, but on all of the everyday small items. And that really, really adds up. So it's about that long-term. How does that provider, that vertically integrated provider, not just going to sell you that asset, but are they going to be able to sell you that asset, tell you what your expected maintenance costs are, and then deliver on that and have a methodology for getting those costs lower and lower and lower as their volume grows and that economies of scale works in your favor. And that's one thing we of course focus on at JWB.
Sounds like at a minimum, if you're going to call yourself vertically integrated, you need to have a construction department in-house. Like, you might not be the home builder, but you have people that project manage, you have folks that can like look through estimates and like really see that have experience in that trade and can manage that thing for you, be it with an outside contractor or your own in-house kind of like handyman and drywallers and stuff like that.
Yeah, I think you just need to be able to develop, you need to drive significant dollars of construction. So like JWB starts over $5 million of construction every single month. So that's where this thing really matters from a construction perspective, because if you're driving $5 million a month of construction, if you're writing those checks every single month, inherently you're going to get cost savings that you can pass along to your clients. And then inherently you're going to have management in-house of that construction if you're doing $5 million a month, like we're talking about. So you're just not going to drive enough volume if it's just one person in your organization who's working with a bunch of handymen. You're just not going to drive enough volume.
Coming from the construction world myself before my career as a marketer, and I used to, one of our biggest clients was the biggest like hospital chain down in Miami, and they were like the #1 spender in construction in Miami, and we were one of their like key general contractors. I can tell you what it sounds like you're saying. It's like you judge it by the amount of influence you have over your contractors, because he or she who spends the most in construction will have the most influence, and you can also probably delineate it across the line of like how much you spend and how well you treat them and like how loyal they are to you. Because at the end of the day, it starts with cost savings, but the real value of being that 10,000-pound gorilla in the construction trades is the preferential treatment.
100%.
Is the idea that, hey, when things get busy, they're moving other people off the schedule to keep your schedule on. And specifically in Florida, when hurricanes come and like these things happen and everybody's freaking out ahead of the hurricane, you have everybody making sure that you're prepared. And even more important is, God forbid, we get hit by a hurricane. now they're able to go charge top dollar to somebody that they don't know, but they're going to stay with the person that they know is going to be there forever, and they're going to give you preferential treatment and show up and fix your residents.
100%. I mean, every part of the country has their form of a natural disaster. We happen to have hurricanes here, but I think what's more pressing and more kind of relatable is just the storms that happen every single day.
True.
Like it's the quality of the service that we have to take care of your renters who are going to be hopefully making a decision to renew that lease, right? To stay, to continue to be a great resident for us. They're not going to do that if there's more value somewhere else, right? And that comes down to a lot of customer service. And a lot of that comes to how do we perform when there are maintenance issues? And a lot of that comes down to the contractors that we have. And so that influence that you're talking about really matters. The standards that we have for our contractor base go far beyond just the cost savings. It's how do we work together? How do you serve our residents? And that really matters. And then, when we do have, one of those big storms or a hurricane may happen, and any of those clients that are listening in right now, I'm sure you can relate to this. That JWB clients are the number one priority when it comes to those trades that are most needed after a big storm, like a hurricane. Roofers. It is impossible to get in touch with a roofer after you have a major storm.
Roofers and tree guys.
And tree guys. Well, we report on this. We report all of our maintenance work orders. Everybody, of course, after a big storm, you all ask those numbers. The days of response that we have, you can measure in hours. And that is, again, because of the influence that we have, because of the volume of work that we do.
Got it. Patron Santorius brings up a point here. Michael Santorius says, Greg, as someone who's completed several 1031 exchanges, attempting one without a vertically integrated company who doesn't have inventory, you may have challenges getting your exchange in time. I agree, Michael, but we brought it up inside the construction side of it, right? Because it is one part inventory of just like, do you have a 1031 and do you have options on properties in case one falls through? But you're going to have to go to that second option if the construction and the property is not ready and is not already filled in with a tenant, right?
Yeah, absolutely. And I think Michael's spot on here, specifically talking about that 1031. I mean, let's just put this in real dollar, amounts here, right? If you think that you're going to go and do a 1031 exchange and just work with a turnkey company, and you happen to find a fake turnkey company or just a regular turnkey company, those rules for 1031 are really solid, right? You have 180 days to close, but you have 45 days to identify your property. There's not many turnkey or fake turnkey companies that can meet that 45-day threshold. Vertically integrated companies like JWB, easy. No problem there. So I would absolutely, I think working with the VI company like we're talking about obviously is something that I'm biased and I think is the best because I've just seen it work so successfully. But I would definitely think if you're considering a 1031, do not even consider going anywhere else other than a vertically integrated company.
Yeah. And, go look no further than 2 episodes ago, Jag Chadha's episode, right? Like that is the perfect example of how things can go wrong if you are doing a 1031 and you're not working with a vertically integrated company. And she has the 3 experiences, right? She's got fake turnkey, regular turnkey, and vertically integrated. And she talks at lengths about that. So
I forgot to put the numbers to it, but it can easily cost you $20,000, $30,000, $50,000 of taxes that you wouldn't have otherwise had to spend if you run across those deadlines and you don't work with a vertically integrated company.
Got it. So the next piece is property management. Let me guess, fake turnkey people don't have property management in-house, GC. They're maybe a realtor that's like, no, I got this house for you. And I got my cousin over here who's a property manager who's going to do it for you.
That might be one. I think I see a whole lot of companies that are marketing agencies and so I even see that more than just realtors, acting in the turnkey space. But I see a whole lot of marketers out there that are pretty good at driving a list and getting people, excited about this asset class, but don't own the assets, don't control the construction, and they don't have in-house property management. And in-house property management is such a differentiator. I think it's so critical. So fake turnkey would be no property management in-house. And it is very, very common in this space. So watch out for that.
Yeah. So what's regular turnkey?
Regular turnkey would be having property management in-house. So the same company that is selling you the asset is also responsible for collecting the rent and managing that relationship with the resident, but they are more short-sighted. They are only signing 1-year leases. That is a very normal thing in the, call it turnkey space. They haven't evolved. They aren't thinking long-term. They're not thinking about managing your money for the next full market cycle. They're not thinking about this as an avenue for a better retirement strategy for you. So they're only focused on 1-year leases. And, I'm not sure how much you want me to go in depth there, but ultimately 1-year leases are a recipe for more turnovers, which means more times your resident is going to be leaving your home, which is costly. Every time a resident leaves, it can cost you between $6,000 to $7,000 when you talk about the lost rent while they're moving until you find a new great resident. It can cost you in terms of maintenance costs to put the house into great rental shape again. And it will cost you in terms of fees from your property management company. And so it blows my mind that property management companies still, the status quo is 1-year leases when there's such a correlation between long-term leases and better return on investment for the end investor. But that's your typical turnkey company. That's what they're doing.
Yeah. I got this this property management conference coming up tomorrow. I'm going to be talking about how you lay out a point of view across an industry. And I'm kind of nervous to share ours.
I don't know. You might run into a buzzsaw.
I might run into a buzzsaw because I'm going to use it as an example, but I'm essentially going to be like, hey guys, if you want to create word of mouth, you need to align your priorities with your clients. This is how we do it in JWB. And then I'm going to completely just rain on the parade of 1-year leases.
You were talking about how you like doing business with those who like to challenge the status quo.
Yeah.
I think you're going to go down that path, challenging the status quo.
I'm not really interested in working in the ones that don't, because let's talk about what vertically integrated is, right? To me, I'm assuming what you're going to say is vertically integrated companies truly put this like long-term relationship at the forefront of this thing and sign 2-3 year leases and incentivize renewals instead of turnovers and educate their residents about how much less it's going to cost them to increase their rent by $50 than to move out. And they educate their investors about how it's in their best interest to get a $50 increase in rent than have somebody move out and get somebody else paying an extra $100 and like these kinds of things and really measure long-term stays for rental property investors as the metric for success, as opposed to your things rented.
Right. The differentiator is, what does that company view themselves as? Are they a regular status quo property management company? If they are, they're probably signing 1-year leases and they think their job is to keep your house rented. A vertically integrated company who is focused on a better retirement strategy for you through single-family rental property investments, they think of themselves as an asset manager. They are here to deliver a return on investment for you. So all of those examples that you just rattled off there, those are questions and answers that company should be able to guide you on, because there are a whole lot of ways that a property management company can be really good at keeping your house rented, but drop the ball when it comes to delivering a better return on investment. But you got to think differently. So, I think one of the most eye-opening moments for me in my evolution in this space has been when we started to buy property management companies. Because I've always seen our books on the property management side, but I noticed a lot of differences when I started to look at the books of other property management companies that we were buying. And we've bought 5 property management companies now, and we've seen a lot of others that we said no to. And one thing that is really consistent is you see a really high percentage of the revenue in those property management companies coming from tenant placement fees. 20 to 50% is what I typically see of all the revenue that's generated for a standalone typical property management company is generated in those tenant placement fees.
20 to 50% of revenue is tenant placement fees for the average companies you're looking to buy.
25 to 50%.
And those are the good companies that have made it to the point where they want to be bought.
Yeah, that have an asset that I want to buy, right? There's a whole lot that's a lot worse, right? But 25 to 50%, and they do this by signing 1-year leases, because 1-year leases lead to higher fees collected for the property management company. Typically, your property management fees will be, call it 1 month's rent. And so when they rent that home out for you, they're earning 1 month's rent right off the bat. If they only sign a 1-year lease and that lease comes up in a year, that resident moves out, Well, that property management company is going to earn another month of your rent to go towards that property management fee, which is, a big revenue driver for them. But you got to work with a company that thinks differently. A vertically integrated company who makes their money not from the majority coming from property management fees, but on home sales, property sales, will think about it differently. And they'll say, I understand that the longer that I keep my resident happy in my home, the greater my return on investment is going to be for me as an investor, because I don't have that $6,000 to $7,000 of cost coming my way. I don't have the tenant placement fees coming. I don't have the maintenance costs coming. I don't have the lost rent. And if I can defer that hit coming to me, and so it doesn't happen every year, but it might happen every 4 or 5 years, they understand that's how you as an investor is going to win. And they design their business and their property management services around that. And so the first thing that you'll notice is that they sign longer term leases. Yep. They sign 2 and 3 year leases are what we sign at JWB. Then they focus on renewing leases. I don't even think I've told you this stat, by the way. Our property management team is
tell me the stat because I need to put it in my keynote.
Yeah, achieving things that I didn't even think were possible in terms of renewing residents.
They were at 70%.
They were at 70%. You go back, I don't know, 3, 4, 5 years ago, and if you listen to the show at that time, I was talking about 65% is best in class for lease renewals. So this is when your resident signs a 2 or 3 year lease right off the bat. And then 3 years later, let's say they come and they have the opportunity to renew. I was saying 65% was best in class because that's what we historically were doing. Then it rose to 70%. I've been talking about 70%. Yeah. Well, we just crossed the 80% threshold in quarter one of this year. So I'm not saying that is repeatable. I didn't think that was possible. We'll call 70% or 75% best in class here. Yeah. But they focus their activities on longer term leases. They focus this on a service organization for your residents so that they want to make the decision to renew. And, by doing that, the average duration of resident stay lengthens. And so our average duration of resident stay is 4.5 years. And why do they do this? It's because they don't make the majority of their money from tenant placement fees.
Are tenant placement fees lower than, are renewal fees lower than tenant placement fees?
They are. That's a really good point. So a tenant placement fee is equal to 1 month's rent, which might be $1,400 on average or so for your property. A lease renewal fee is just $200 for each year that is renewed. Yeah. Right. But as a company, if all I was thinking about is a normal status quo property management company, I would look at that and I would say, that's a big amount of revenue that I'm giving up if I try to sign longer term leases. Yep. And this is what's going on in the minds of normal property managers. To get them to sign 2 or 3 year leases, first of all, it's a ton of work. Yep. So you're asking a normal property management company to do 5x the amount of work to be able to sign 2 or 3 year leases. And then what you're asking them to do is to cut their revenue by 25% or more. Yep. And there's not a whole lot of property managers that are going to be willing to do that. And they probably couldn't even survive. So the difference for a vertically integrated company is they don't make the majority of their income off of fees like tenant placement fees. Yep. They make the majority of their income off of home sales. We understand at JWB, if we get really good at treating our residents really well and then make the decision to renew and their maintenance costs and their vacancy costs are lower and your tenant placement fees are lower, we're going to beat your return on investment expectations. You're going to be excited and you're going to fulfill that buying plan. And 3, 5, 10,
friends,
20
show
properties.
up to shows.
There you go.
Events that we host.
And we
get
went
a
out.
Nickname.
I tell you, it wasn't easy to convince us to do that, 15, 18 years ago. But it's proven to be a win all across the board, and that's why we love it.
So Tara Paget is asking, why don't most PMs try to obtain long-term leases up front? What are the pros and cons versus 1 year versus 2 year or longer? Sounds like you just kind of answered that, right? This idea of, number one, there is no con for the investor, right? For the investor, what you are doing is guaranteeing occupancy, lowering your vacancy rate, lowering your vacancy costs, maintenance costs that happen whenever you have to do it, and that loss of revenue that happens. And when you're doing these 2-3 year leases, you get to bake in the price increase, so you don't have that awkward conversation every single year of what is happening. But for the property manager, the pro to a 1-year lease is that it's easier for them to fulfill on.
Oh yeah.
The con is that it's much harder to fulfill on. So it's really it's up to the owner to say, no, you figure that out. It's not on me to figure that out. This is what I want because I want to maximize occupancy in order to fulfill my return
100%.
expectation. And I expect you to get really good at renewing.
Absolutely. A lot of JWB clients try to bring that to their other property management companies. From what I hear, they haven't been so successful in convincing those other ones. And ultimately, it just comes down to an economic reason that most property management companies just simply can't do it.
Yeah. So basically the con is operationally, it's super difficult. You got to be a really good operator in order to be able to do it. All right, GC, that's PM. I'm going to summarize PM as fake turnkey is no PM in-house. Regular turnkey is PM in-house, but they are not aligning the goals of the property management company with the goal of the investor. They're just running a property management company.
Mm-hmm.
Vertically integrated means that everything is aligned in order to preserve the long-term experience of holding that house, which means that you are maximizing for tenant stay, which means that you are signing long-term leases, and you are really devoting significant efforts into maximizing, measuring, and reporting your renewal rates.
Mm-hmm. Yeah, well said, buddy.
Cool. Okay, last but not least is client services, GC. So, right, like I assume that a fake turnkey, what I call my portfolio manager, a fake turnkey, I don't assume has a portfolio manager in-house. They don't have like a financial advisor in-house that is telling you like how this thing is performing and what you can do with it and solving those problems for you, asking those questions for you.
Yeah, absolutely. You can really start to get a sense if this is a fake turnkey company by asking them the amount of staff that they have in their entire organization. And if do they have a physical location or are they all remote? That's another sign of it potentially being fake turnkey. Not saying everything that's all remote is a fake turnkey company, but these are signs. What you are trying to buy into is a passive investment where you can sleep well at night. You don't have to be an expert in real estate. You don't have to be an expert in that market. And in order to accomplish that with something that is inherently complicated, like single family rental properties where you're renting homes to families for years and years and years, there has to be a physical presence. There has to be boots on the ground, or else they many times are just a middleman. And so what is fake turnkey? I see a lot of operations that might have 10 people on staff for their entire organization. And you ask them about their customer service, and they might say they have 1 or 2 folks that are customer service folks. But really what those folks are doing is they are acting sort of as a liaison to a company like, to a property management company, and so they don't really have any say when it comes to fixing issues, because at the end of the day, it's the property management company that is responsible for delivering for the residents and delivering for the owners. So, just ask questions. If it's like 10 folks, if there's 1 or 2 customer service folks, if they're all remote, those are signs that it's probably not something where when push comes to shove, they're going to be able to solve problems for you versus just being a liaison or a middleman.
Got it. What is regular turnkey when it comes to that?
That they have an organization that is sizable, right? Depending on how big they are and how much volume they do, right? JWB is one of the largest companies in the country here for turnkey. We have 130 people on staff. We are very lean when it comes to hiring. We don't hire 130 folks just because we like to hire folks, right? All of those folks are incredibly important, but this is what it takes to operate at a scale of, selling 400 homes a year. So, if not every company is as large, but start to scale that back. They got to have, 30, 50 folks there.
In my head, I was thinking minimum of 50 people in order to really have all that stuff in house.
I'm trying to give the benefit of the doubt, but they have to have done this for a long time. And in order to do this for a long time, you need staff who understands it. So, length of time that they've been in business, size of staff, are they physical in that market? Those are big things. So a real turnkey company would have those things.
So 10 plus years experience, 30 to 50 employees, and just this track record with somebody that's actually your client management, your portfolio management, that's really treating it as an asset.
You'll know real quick when you get on the phone with them if they get return on investment
That
from the
gets
client.
return on investment.
Yeah.
So you're talking to someone that gets return on
And
investment.
most property management companies do not.
Yeah.
You know,
yeah.
so
They get maintenance.
yeah, or keeping your house rented. I keep going back to that's not the end result, right? Or that's not what you're going for. So a real turnkey company would get that return on investment.
All right. So then what's vertical integration beyond that?
So vertical integration beyond that is the size and scope of the management, the experience of the management. I think what vertical integration allows for you to do is to have such wonderful business insights. JWB manages 6,000 rental properties. So when I get on the show with you all and you ask me really great questions, the answers I get to give you are based on that data flywheel that we have here from managing 6,000 homes and from selling over 3,000 turnkey properties since 2011. And we house all that data. We look at all of that data. We report on all of that data for all of our clients. Every quarter, you get your client ROI report, which breaks down exactly how your investment is faring. And so when you have that data-driven approach and the size and the scale and the scope of what you've been doing for so long is there, you're able to make better decisions on behalf of your clients. You're able to run your own business better.
Yeah.
You're able to mitigate risk. You're able to understand opportunities better.
Yeah.
And ultimately, you're able to deliver on the return on investment. I'll just give you one example before we kind of synthesize this a little bit, but one of the most common questions that we get from newer investors is, how do you know what my maintenance costs are going to be? It's one of the easiest ones for us.
Yep.
We look at the data. We know exactly, is this a new construction home? Is this a renovated home? Those have different data sets for how much maintenance should be expected.
Yep.
And that's how we inform clients that are buying homes from us on the pro forma, when they make the buying decision. But most turnkey companies just simply don't do that. They just use pie in the sky numbers or industry standards. And guess what? They err on the side of lower cost because it inflates their returns at the time of purchase. And ultimately, many times they struggle to hit those.
Yeah, I guess what I'm hearing is you're drawing a line in the sand in proprietary data to a large extent, right? So like fake turnkey is you don't have a portfolio manager, a person that's helping you make investments. Real turnkey is they have somebody in there and they speak ROI, not maintenance, not occupancy, right? Like they're talking about actual returns. And then, but they're still using values from a book. They're using standard values that they're getting from an outside report or an industry standard or whatever, whereas truly vertically integrated providers are establishing, they've been there long enough, they have enough strategy, they're establishing their own data sources, and then they are getting to the point where they can make decisions based on real data points that happen based on their own proprietary experience.
Yep.
Okay, that makes sense. Billy Green says, does the vertical integration process and good reputation of JWB result in any benefits per your relationship with insurers in Florida? Billy, I'm glad you asked that because, right now we're talking about all the vertically integrated things that happen within the property line, right? Like these are all things that you control that stay within the property, within the deal that you're creating. And we're about to move into this idea of true vertical integration being something that extends beyond that. But before that, we want to satisfy what Mike Foster asked us to begin with, which is, hey, you can build all these services in-house under one umbrella, one management, one company that reports to one CEO. But there is a handful of things that are still outside. They are, in your case, strategic partners that you build long-term relationships with, but you don't manage them directly, GC. What are those things?
Yes, absolutely. And I wouldn't even say we want to take these things in-house. It is a strategic move to not take some of these things in-house. But the things that are not under this roof, not directly in-house, would be lending. It's nice to have a third party and an arm's length there when it comes to the lending component. So lending is an approved network of lenders that have been approved, vetted by JWB, and we know exactly how they are going to deliver not just the interest rates and the terms of the loan, but the customer service component. Okay. So that's not in-house. Our contractor base, we have management of the construction services in our organization here, but my team is not actually, we do not have employees that are out there swinging the hammers. These are subcontractors. And the same thing with builders, right? So those who actually swing the hammers and build the houses, they're not employees of JWB, and that's a good thing. That's a good thing. And then insurance, just like Mountain Man's question here.
Yep.
You know, insurance is a crucial part of this. And we have, you know, insurance providers that we love. Ritchie Insurance Group is our kind of our flagship insurance provider, and she and her team are so ingrained with everything that goes on
Inside our WhatsApp group, answering questions.
Yeah, there we
live.
go.
Yeah.
Right, been on the show multiple
Been on the
times.
show, sponsored our event.
I was going to say sponsor for the golf
Was there
tournament.
hanging the whole time.
There we go.
The reason you and I met.
Absolutely. Yeah. It's funny.
Yeah.
Forgot about that one.
Pretty integrated.
But to Billy's question, I mean, that results in a ton of cost savings and hassle savings for you. So it's great that they're a third-party organization, but they see every asset before we sell it. Before we make it available for sale. They're going to see that asset. They're going to tell us exactly what the insurance premium is. Through the closing process, they're going to save costs and time all throughout. So so those are the three main things that are not in-house.
Yeah, and he's saying, what are the benefits of the relationship with insurers? I think that you kind of hit on that. It's that you by having a deep relationship, you get the pricing into the deal before, so you know exactly what the pricing is. Other benefits are the fact that, having somebody like Whitney inside the WhatsApp chat, asking questions, answering questions, and doing those kinds of things. Any other, I mean, I don't imagine you get preferential pricing, but you do get better information, I would assume.
There's things that we get that you might not think of. So like, for example, insurance companies look at the rate of loss and they would look over an entire book of business. And so I know what Whitney and her team have been able to show the insurance companies is JWB has an entire book of business, like the 6,000 homes that we manage. Call that an entire book of business. Look at the level of quality of the construction work that's here. Look at the level of quality of the renovations and what that translates into a lower rate of loss for the insurance companies. Oh. And so what this does is it creates better rates.
So you do get better pricing.
Yes, we do get better pricing, but it's also more than that. It's less inspections required.
Oh,
so every time that, insurance companies now especially are requiring lots and lots of inspections. Well, over time, we've been able to build such trust and credibility with that insurance company that they may say, you know what, you don't need that 4-point inspection, whereas somebody just off the streets would be, and that would save you maybe, I don't know, $50 or $100, save you some hassle from having to coordinate that. Yeah. Whitney and her team and our team would coordinate that for you either way, but you're going to save that time. So there are a lot of cost savings that happen there.
And I think that goes down the line of all these outside vendors, right? Like I know when it comes to lending, I believe that one of your strategic lenders realized that somebody had closed under one rate and the rate had changed or something like that, and they were able to bring them the new rate proactively and save them that type of money. With construction, we already talked about the benefits of that. What I'm really hearing is this idea that whether you are, turnkey, vertically integrated, not a big difference in this idea of having outside providers when it comes to insurance, mortgage, and construction. But the big difference between a turnkey and a vertically integrated provider lies in the length and depth of the relationship with those providers. And, that correlates with these special treatment that you get as an investor, preferential pricing, better service, more options, proactive options, and really less uncertainty.
Yep.
Okay, got it. I thought I said that pretty well. I don't mind me saying.
Well done, buddy.
Okay, GC. Now let's move on to the big aha that we had was this idea that when you are being vertically integrated, can you start to affect the deals that happen, like my wealth from outside the property line?
Yeah.
And it came from this idea that JWB, having been here for 17 years, not diversifying for other markets, has made a long-term bet into getting involved with the city, becoming pioneers of downtown, doing the research that says, downtowns, when they start to thrive, properties all around that urban core appreciate at a rate that's 20% higher than the average. I'm not a numbers guy. Than the average home price appreciation around the country. So let's bring in a bunch of stakeholders to an urban core, get them to buy into this opportunity for them as downtown developers, so that the investors around it can do this, and we can bend the rate of appreciation rate for a city.
Absolutely. That is the single greatest thing that we could do to increase your return on investment, is if we can have an influence on the home price appreciation in Jacksonville. And the way that you do that is by raising median incomes. Yeah. You need to be an influencer in raising median incomes if you want to create this unlimited potential of what home price appreciation can be for you as an investor. And fake turnkey and regular turnkey companies just can't play at this level. And it's taken 18 years.
Yeah.
It's taken a whole lot of learnings along the way and relationships and
Yeah.
money and strategic partnerships and saying no to other things so that we can start to make real impact and real change. And it's going to benefit, it's already benefiting our owners,
Yeah.
our turnkey clients, but the benefits to the community and to our renters are just as exciting. And that's that triple win that we talk a lot about.
Yeah, and it feels like you guys, recently we started talking about of this like economic flywheel, right? That is this idea of, hey, if you start making homes in a neighborhood better, then the amenities around the neighborhood will want to come and want to invest in it. Amenities in the neighborhood come and want to invest. It raises the quality of life. Better quality of life attracts employers that have jobs to come settle in this town, and employers that have job coming to settle with this town increases jobs, increases higher paying wages, which increases the amount of homes that get to be built in a neighborhood and renovated in a neighborhood, which then keeps going and going. And it feels like, you guys, now that you got to this level where you're pioneering the downtown development and really evangelizing this thing, you're really starting to drive that economic flywheel. But it really kind of just started inside of a community flywheel where, like that, there's one piece of that economic flywheel that's the community, which is essentially like, man, you make one house after another bit better, but you start looking at it from a neighborhood scale. So you build a playground that adds to the neighborhood. And I got to see this presentation at a TMM of just like these neighborhoods that JWB has been in, what it looked like before, what it looked like after, nicer looking houses, playgrounds and amenities and these kinds of things. And that's really like what your wedge in was this vertical integration where, you really saw what neighborhoods were going to work long-term in Jacksonville and started really investing in them.
It's been one of the most rewarding parts of what we've built here.
Yeah.
And we don't talk about it nearly enough, especially on the show. But what you all are a part of when you invest in JWB properties is so much more than just generating a better return on investment for you. You're truly changing lives. And one of the coolest things is we started this business when Google Street View came into play.
Yeah.
Google Street View, if
Yeah,
you go and you see, you can look up on Google and see what a street looked like 10 years ago or 5 years ago. Well, I'm so glad that JWB coincided with that technology, because now we have the ability to go back and look at streets that were overrun with crime or had dilapidated houses or had vacant lots. And now they are thriving streets where families live. Many of them are brand new construction homes. And inside those homes, kids are learning better, right? There's not as much financial challenges in those homes. The quality of life that we all, as a part of this, have been able to affect is mind-blowing. And we started to see this pretty early on, because we're so focused on the right neighborhoods for us to be in Jacksonville. And, pretty early on, we saw this. And what doesn't get talked about enough here is not just the community development, redeveloping neighborhoods and streets, which is, I love it. It is wonderful to see. And we get success stories that we hear all the time about how crime rates have gone down and how, the taxes that are raised, the property taxes that are raised, are going to fund our essential workers and our police and our fire and our teachers. And so those are all really, really important. But what doesn't get talked about enough are the individuals in our neighborhoods that are rising up, that are helping themselves through, this impact that we can make to take that leap from renter to home owner, renter to homeowner, because there's, I don't know if this is the number one most direct correlation to financial wealth or what have you, or a solid financial future, but it's got to be way up there. Do you own a home?
Yeah.
Do you own a home? That if that answer is yes, you are in such a better financial spot, not just for yourself, but for your future generations. I actually pulled some stats here from the National Association of Realtors. The average homeowner has $300,000 of net worth. The average renter has $8,000 of net worth.
That's a big difference.
It is a large, large difference. And we have this platform now where we can help our renters become home owners. And by doing that, we are creating a win across the board. First, we're helping that individual. We're helping that individual take advantage of owning a home. And, especially if you look over the last few years, if we can help individuals become homeowners, you see how much home price appreciation has benefited those. And you start to feel bad about those who could not take part in that run-up of home price appreciation. Well, that wasn't a one-time thing, meaning that home price appreciation. Home prices appreciate slowly over time, and that creates a tremendous amount of net worth for those renters turned homeowners. You think about it from the community impact. When more people own homes in their community, they take better care of their homes. Mm-hmm. They have more civic pride in their neighborhoods. Yep. Crime goes down. And then we think about it from a society perspective. And in our country, home ownership rates are the same that they were 25 years ago. With all of the wealth that's been generated in our country in the last 25 years and the advent of new technologies, it's shocking to me that home ownership rates are still what they were 25 years ago. No. And the government and our country needs home ownership to work because of the societal advantages that come along with people owning homes. And so we are a very big contributor to first-time home buyers because we're uniquely positioned to help those individuals, right? 42% of all new construction single-family homes that were sold in 2023 were JWB homes that were sold under $300,000. Yep. 42% of homes under $300,000 that are new construction homes were JWB homes. So we are in this unique spot where, with 6,000 residents that we serve, to help our residents become homeowners. And it's something that we've always been passionate about, but we've gotten even more strategic about it just in the last year. We had Tara Klein on the show not too long ago, and she was sharing how JWB Realty is in-house realty services now for everybody who wants to buy a home, but specifically for our residents to become homeowners as well. So yeah, it is an unbelievable spot to be in where you can help so many people and everybody wins. And that's what we're really, really focused on, making an impact.
I feel like I just got you talking about taxes. Like
sorry, man.
I just teed you up about something and you just blew me away with like a whole bunch of passionate stats and all this stuff, man. It's interesting. It's interesting that we haven't talked more about it when there's so much happening behind the scenes on all this stuff. And, to me, it makes a little bit of sense in like kind of like knowing you and your partners and how, you've always been doing these like community activities, but you've always, until I came around and like really started bringing hype man culture, you were just really purposefully understated to a certain extent.
Sure.
But more than anything, the way I see it, man, is this idea that Jacksonville has been this place where it was a very affordable place to live. And I think if you look around, what it needed was a couple of improvements in quality of life and like the housing stock and these different things in order to bring up the quality of life, because it was still really, really affordable. So bringing up the quality of life was like the first part of it in these neighborhoods. And now that that quality of life is up and you really are on the precipice of like increasing median incomes and doing this downtown thing and bending the curve on home price appreciation, now this whole like affordability piece of it, it's like you gotta find a way to plug the renter into the economic flywheel, and you do that through home ownership, because now that it's going to start accelerating, there's this real chance of them getting left behind. So it is the moment to get loud about it, right? It is the moment of like, hey, it's been all good and well until now because people could still afford a good quality of life in this wonderful city. But if you don't start kind of like taking that step up now, it's time to plug in, right? Because it's gonna, if not, it might just, leave you behind, like I have felt in cities that I've lived in before.
100%. I can't think of a more impactful thing than doing what you just said right there.
Yeah.
Helping everybody enjoy the fruits of this wonderful real estate market, this wonderful economy that we have here in Jacksonville, this wonderful community that we have. And we sit in a unique spot to be able to affect positive change across all of those places.
I love it, man. So, if you are, again, fundamental, this one really is a line in the sand between regular turnkey and vertical integration, right? Like regular turnkey, not working on the economic flywheel, vertical integration, working on the economic flywheel, smaller turnkey providers working at least on the community flywheel, right? And if you get to work with a vertically integrated provider that's gotten to the point where they're really graduating and they're doing this stuff, then you really got to start talking about, hey, how are you plugging residents into ownership? Right? Because if not, then it's going to become an unsustainable equation. And we started to talking about strategy and long-term strategy. So it's like, it makes perfect sense that, you know, the more vertically integrated you are, the further out you're thinking, the wider the umbrella that you affect, and the more that you can really drive benefits for, you know, investor, employee, and community member of the house.
Yeah. And let me just say, it's beyond just the feel good of this message right here that hopefully feels good to all of you of helping. I mean, this is the best thing I can do to drive your return on investment.
Yeah.
Because if I can take 6,000 renters and turn those into homeowners and more and more and more as we continue to manage more properties, that's significant housing demand. That leads to home price appreciation for you. That's more return on investment for you. If we can make Jacksonville the talent destination and the destination for quality of life where people want to live, that's raising median incomes. That allows rents and home prices to go up, and people can still afford it. And that is the best thing that we can do. It trumps every other property management strategy.
This is my business development strategy. Show up as the, you know, create the perception that that your business is a place where somebody can get discovered, where somebody can be the stage to propel their career. You guys are doing this for a city, right? Like if Jacksonville shows up not just as this place that's going places, but the place that you can show up to as a renter and leave as a homeowner, then you're going to attract all the best and brightest young people to this city in order to make that leap. And that's only going to drive more rental demand, more housing prices, you know, better housing stock, continue the economic flywheel, man. So I just couldn't agree with it more. And I think Pop-Up, old Everett Shapiro over there, who's with us, didn't check it on the roll call, Pop-Up, but he says, Gregg Cohen from Maine.
Pop. Love you, man. I don't see that happening. We have an incredible mayor here, and I don't know if I'm cut out for that, but thank you for the support.
I disagree. I think you're very cut out for it, Greg. I think we should all just like start peer pressuring you into doing it.
Oh goodness. Oh goodness.
That events, networking, all the stuff that introverts like to do.
Yeah,
You're
exactly.
a really good public speaker, even though it gives you the cold shivers at night
It
to
does.
do it.
I go home every night and I just curl up like a little ball. Oh man, we love you guys. Thank you guys.
I love it. Quick summary, right? Just there is fake turnkey, there's regular turnkey, and there's vertical integration. From a very high level, you know, vertical integration just means how strategic are you with all things involved, right? It is having things in-house that you can control. It is having deep insight into the things that you are doing. It is having deep influence with the people that you're working on as partners. And at the end of the day, having a vertically integrated approach provides deep impact into the returns that an investor can have when they're working with them. It provides a deep impact into the lives of the people that rent from them and that live in their homes. And it provides a deep impact into the prosperity of the community and the city that they do business in.
Just feels good, man. Just feels good.
Feels good. Feels good. Feels good. All right. Nadeem Shah says, Billy, you wash your hands. I'm not really sure where that's coming from. I think I missed the back end of that conversation, but I got to say, feels good to have these conversations. To restate it, thank you to Mike Foster, who, you know, encouraged us to host this and redefine this for everybody. And especially because it gave us this opportunity of like where it's going, right? Like, and how this is doing. And we love that whenever we do a show, the community shows up. So thank you to our community for showing you're the ones that make this thing worthwhile. We never take it for granted that you take an hour out of your day to spend some time here with us on Tuesdays. And next Tuesday, it's Not Your Average Insights again, man.
Ooh, it is.
No, is next Tuesday when you're out of town? No, next Tuesday is Not Your Average Insights.
Sweet.
Yeah, we get to jam on the news of the day. A lot of news out there, man. Jacksonville got ranked the second fastest. What is it? What was the
hottest job market?
Second hottest job market in the US. We're going to talk about that. We're going to talk about the context changes of how the Apple Vision Pro being released and the impacts that it could have on real estate, and a whole bunch of other really, really interesting news stories of things that are happening right now. Can't wait to do it, GC. From now till then, anything that you recommend for our friends and family here?
Don't be average.
See you next
See
week.
ya.